Okay, I'm going to start sharing my screen. Righty ho. And what we got going on. So, hey, Bruster, how you doing? Okay, so how do we all get on today? Any horror stories? No? Right then. So the dollar pretty much was an inside day, wasn't it? Not the easiest territory to be trading today. There was a fair bit of two-way price action. So I think what we need to be doing is really assessing as to whether we're at the high or low of the session when we come in, whether you're trading at the Wall Street Open at 9:30 New York time, or if you're looking for opportunities before then, between 7 a.m. New York and 9:30 New York. They do present themselves, um, but it depends on how you want to approach things. I mean, if you want something mechanical and a fixed window, um, Brista trade opportunities where essentially you're using the time of day as your trigger, and therefore you're just sticking to a particular window to trade. So that might be at 7 a.m. New York, and you might be only looking for trades between 7 a.m. and say 11 a.m., or you might narrow that window down to 8:30 a.m. New York. Give yourself a bit of a lie-in, and come to the screens then in anticipation of higher volatility as we get closer to that Wall Street Open. So what we saw today then was okay, great, break even day. A good day is when you've followed your plan and you've executed it flawlessly with no mistakes, even if you lose money. So long as you have your plan, whether it's mechanical or slightly discretionary, whatever it might be, whatever your strategy is, whether it's 100% mechanical or partially mechanical, but you want something that you can rinse and repeat day in, day out. So always be present Monday through Friday. Perhaps you only want to trade on Wednesdays and Fridays because you find that those days are the days that you get the best setups because you've had Monday and Tuesday's order flow, taking the market high up, and then your path of least resistance is probably to the downside. So Monday and Tuesday's order flow took you high up, and on Wednesday you're looking to short the market, and vice versa. So maybe that might be your strategy that you only come in on Wednesdays and Fridays to trade, right? So long as it's something you can rinse and repeat, and if you make mistakes, then learn from them. But if you execute everything flawlessly and you come out break even or a little bit up, or even at your max risk allowance for the day, which might be 1%, might be 0.5%. It might be 5% if you're very ballsy and confident with your trading. Either way, so I congratulate everyone that executed their trading plan well. And let's have a look at the market. So the dollar was two-way, inside day. We were looking for weakness in yields to set us up for our trades short dollar. And we got some of that. We got some weakness in yields. We got some weakness in the dollar. Um, I was a bit distracted today, so I really didn't do much. But I tried doing something with the indices and the gold price. I made a mistake on the indices. I went in too early on the NAS before it finally melted. I just had to wait a little bit longer. I didn't execute that properly and lost a bit of money on that, but made it back on gold. So let's go through these and then you let me know, guys, if there's anything in particular you want me to go over. But we can start with what I've got here on the list. So the US 30. So that was an ambitious target all the way down there, but sorry, bear with me, guys. That's my brother. He keeps trying to call me when I'm busy. Right. I'll get back to him shortly. So we've come in to the length in that market, right? So that was the setup. So we took out the if we go into a 1 minute chart, which is actually where I do my analysis on the structure of the market. So we're looking for a break in here. This is around 9:30, so we pushed up, came up high. Now, this was in contrast to what we were actually looking to do. We were actually trying to long the market, but that happened before I could get in, so that was the move, right? But then I shorted it up high. So breaking structure down here. All right, so that was the trade. I like to see one peak and then a retest of the peak. So all this volume up here, the market tends to do that. It tends to sort of fake you out. It comes up for a second attempt and then implodes. So that was the Dow. And I'm actually working on something, guys, so that we can trade these setups together. But I need it to be mechanical for you. And I'm just working on that at the moment. But essentially, we're looking for a couple of peaks. And if I put on, let's do the, bear with me. There we go. I've put together this sort of template so that we can execute these mechanically. So we're looking for a couple of crossovers, because the risk is here that you get in thinking at this point here, right, great, the market is going to do what I think it's going to do, what I was planning, I'm going to short it. But lo and behold, it comes back up into your position, stops you out potentially if your stop's a bit tight. We're looking for 3R, 5R trades, so the stop needs to be relatively tight for that. So the trigger is in fact when we've got a couple of peaks up high. So you can do that by using that moving average crossovers. You get a crossover to the downside, and then you're looking for a crossover to the upside, which is what we get over here. And it needs to be a wide gap between within that cloud. So that's the EMA 10 and the EMA 5, but they're actually based on a 2-minute chart. Even though this is the 1 minute chart, it's actually a setting of the 2-minute chart, which is shown in here. So that's the 2-minute chart. Okay. And I'm just working on some back testing. If anyone wants to join me on that, then more than welcome. It'd be good to get a team of us together. But essentially, I want to see how many times we get a peak formation. We get a double peak formation in the Wall Street Open, high up at the high of the day or at the low of the day, vice versa, if we flip the chart over. Right, so if it was at the low of the day, when I say the low of the day, I'm talking about the American day, not necessarily, I mean, even better if it were the entire day, but it doesn't need to be. So the low of the day, I'm looking for that sort of double peak formation, the double crossover on the MAs, and then particular candlestick formations that we want to see, engulfments and pins and all that kind of stuff to ride the market either up or down. All right, so that's what I'm working on for you guys at the moment, and see if we can come up with something nice for a day trading strategy during the New York Open. So that's what we got on the Dow, and like I said, I think I was on the NAS and I got in a bit early. But lo and behold, it did what I was hoping it would. Yeah, I can't quite recall, but so those were the trades on the indexes for our session. Well done for those that caught it long from the outset. we're looking at stuff here during the volatile hour to be in and out. I don't really want to sit through that for hours. I'd much rather sit through this and be done with it. Short, 5 hour, walk away. Okay? Now seem to be quite bullish. Been trying to break 52220. Which what the which index are we talking about there, Cynthia? Okay, Brussels, that's great. All right, so those were the indexes, and then dollar yen. We were talking at the start of the day that we wanted to see a short, didn't we? We wanted to see a weaker US dollar. Now, we didn't get that until right at the end of the day. So it was very two-way business today. So unfortunately, there was no cigar with that one. I wasn't even looking at the yen, to be honest, during the open, so I don't know what actually eventuated. But we've got dollar strength here, and it took quite some time before it came up high. I think maybe we were talking about it's a shame that it wasn't up high into the Wall Street Open. So we needed that to come up. So we were breaking structure to the downside, a bit of a fake out there, and then the stop hunt moving on in. And then we got the breakdown of structure over here. And off we go. So 1, 2, 3 pushes up into the high. And off she came. Okay. The NAS 100. Yeah. Yeah, we were looking for a move up in the indices, but we didn't quite get that, did we? During our meeting, it was rising, so we were getting that as we were talking about expecting that for the day, and we were saying it's a shame that it's not working the low to then go up from Wall Street. So I have no other opportunity, no other thing to do but short it because I don't want to buy at the high. I want to sell at the high. Okay. Gold. Uh, Gold again was a little bit tricky, but um, so got involved with gold on the prospects of a weaker dollar and weaker yield. So that gave us the outcome. We got the break of structure in that move there. So that would have been a nice entry. So that's, but I got in late because I was doing something on the indices anyway. But there was an entry up here. If I had to stop below, I moved up to break even a bit too soon, got stopped out at break even. And then we got the final push, which I managed to catch over here, getting involved there for the push up. So unfortunately, yeah, I was having to buy up high, but it was already a market that had been broken down. I'd already bought low, and it was really it was like scaling into the market that was already moving up. So that's okay. So we've broken structure, we bought down here, got stopped out break even, re-entered on the next opportunity, and off we went to the upside. So that was gold. Someone's asking for euro dollar. Euro dollar. Where are we? Down here somewhere. Okay. So I guess we were looking for the move up, which we got. Um, so what are we doing with euro dollar, people that are involved with euro dollar? Are you swing trading it? Or are you day trading it? How could I assist in this analysis? If we're swing trading it, we need to go out to the daily chart. Okay, swing, swing. Okay, daily chart. So we talked about that it had broken down. All right, we were looking for the correction, weren't we? So we've got that correction. It's correcting still, right? Now, more often than not, I haven't got any stats on this, but just from eyeing the market, when you get a breakout and the subsequent pullback, usually it would take two or three, two if not three candles in the opposite direction before it rolls back over. That's not to say, I mean, look, for instance, here you got one candle and bang. Um, Same here, one candle and bang, one candle and bang. But generally speaking, I look for at least two or three, two candles before the continuation. And here, of course, typically all I'm seeing is one candle in continuation. Two candles there, one candle in continuation. But more often than not, you just have to trust me on this. It's more often that we'll get, so we're looking for a breakdown. Um, Breakdown, a couple of candles to the upside, a couple of candles to the upside before it moves lower. But more importantly, those weren't very good examples. More importantly, I mean, you could say, well, you include as well the candle. I mean, you had a very strong move up here on that candle there, didn't you? So that has to be counted as well. But the point is that you get these steady corrections. So if we come down to, say, a 4-hour chart, you get this sort of steady creeping correction higher before the rollout. And you can measure it with a 38.2. That's what generally I like to see. If I've seen a 38.2 correction to the upside following a breakout, then I'm starting to look for my shorts. Doesn't mean I'm going to short just because it's hit the 38.2, but I'm certainly going to start moving down to lower time frames and monitor for the deceleration of the correction. Now, at the moment, we haven't really got any deceleration, have we? And deceleration would be candles that are showing wicks like this, um, inside bars. So this one here would have had to have closed below the lows for that to be an inside bar. Retests of the upside, more wicks, strong engulfment candles to the downside. So it's starting to exhaust on the upside, and you're starting to see selling pressure come in. And then once you see those breaks of structure and a retest back in, and then test of resistance, and boom, down we go. So this was too premature to be shorting, right? Um, so we would bid all day long on this, really. But we are now entering the realms of uh, shorting because we're actually coming up and we're finding resistance here at the 50% mean reversion area. Okay, so we've done the 38.2. That's my cue to start looking for deceleration. So now I'm looking for deceleration, especially now it's hit the 50% mean reversion. And let's see if it doesn't start rolling over for the short. But at the moment, we're still front side of the bullish trend. We haven't broken any downside structure. So the bias is bullish still. Okay. Um, if you're swing trading this, what I recommend, and I think we talked about this once before. I've got a strategy for swing trading. I'm working on a price action smart money concept strategy for you guys. On the weekend, I did the skeleton of the course, so I've got it all detailed out, um, written down, and it's just a matter now of getting it all into PDF and then doing the accompanying videos. Um, but there it is, all there. Oh no, not that one. Here, right? So it's all there. The skeleton of this course, and I'll be getting it to you as soon as I can. I'd estimate another couple of months because the videos are going to take some time and getting it all together. It's going to be very professional, all done well. So bear with me on that. But in the meantime, you can. This is a strategy I used to use, but swing trading is just not really doesn't suit me. Um, but by all means, this one here we've gone over this before. So daily analysis. So you've got your daily analysis, breakout to the downside. Okay, so we're bearish, but meanwhile corrective. So we're meanwhile bullish. So let's put this on a. I'll leave it like that. It's fine. All right. So and then at that point, so you've hit the 38.2 retracement. You go down to the 4-hour chart, and what you're looking for now, you're using. Um, you're going to let the EMAs do the work for you. Okay. So you want the EMAs to cross up. So this is the correction phase, and you want the EMAs to confirm the when the market is decelerating. So when they cross up, that's a strong correction. But when they cross back down over each other, like this scenario here, so they crossed up and then they crossed down. All right. When they're crossing over each other like that, that's your cue to start looking for your entry. And what I recommend is you only want to be entering the market once you've broken structure. So at this point, let's say these EMAs were crossed up over one and each other. I can't speak. The black EMA above the blue, like that. Black EMA above the blue. When that happens, you can start drawing up your structural points. So just imagine that we had that crossover. We know that this low here is the line we've got to get below if this market stands a chance of going down, right? If it does get below there, and we've got the EMAs that have crossed up and then eventually they cross back down, and then we break that structure. So we've got EMAs that are crossed over, black above and then back below. You've got the MACD below zero, so that's bearish. And then you've got a market that is starting to slide away. Rather than just chasing it, you just be patient, let it come down, break your structure that you want to see, and then it comes back up, and it usually will come back to retest that area as resistance. You can either sell it at market or leave a sell limit in, because it might happen overnight, for instance, and you're not awake. And that's hopefully where the market's going to then tail off and go to your desired target area. White background is great. Well, the reason I have mine dark is because I'm staring at these charts all day long and have been for many, many years, and it does my eyes in looking at a white background. So I have it dark, but do let me know if I need to change that for you guys. But for me, it does my head in. Okay. White criteria. What criteria do you use to determine if a trading style suits you? Performance or patience? Yeah. Okay. Instant gratification. Yeah, it's your personality. Number one, personality. Number two, practicality as to whether you can actually, um, trade all day long. I mean, for me, as I said, I mean, I can't. I'm busy with other things. Um, But I'm here at the screen all day long, so effectively I could, but I prefer to just get stuff out of the way, and it just makes sense for me to use a strategy that um, is a short term strategy and around the most volatile time of the day, so I can be in and out, hopefully break even or in profit, or rarely at a loss. So that's the idea, and I like the instant gratification. I have to say, I prefer that. Um, I don't want to be looking at my phone all the time to see if the market's going up, down, near my stop. I don't want to have to sit there trying to micromanage it. So if you're swing trading, say on the daily chart or using weekly setups and executing, say, on the 4 hour chart, probably, that means you're not needing to come to the chart every 4 hours and check what's happened. And that's 24 hours around the day. So that means waking up in the middle of the night for you, maybe once or twice, or having to stay awake for, during your hours of sleep, just to, micromanage that trade, whether to move the stop to break even, take some off, add some on, what have you. Or you just can't sleep because you're so nervous as to whether you're going to make a profit or not, which is more often than not the case. Um, until it just becomes um, just second nature, that you're not bothered. You rely on your system so much that you've used it for however long, and you're really not bothered if you make a loss on one particular trade. That, face it, after a couple of days or so, you'll forget it altogether. You won't even remember what currency pair it was. So it really does depend on yourself. And I found, for me, that the day trading is the way to go for me. Right. So Cynthia, talking about, sorry, can I ask you something? Been trying it lately and working perfectly. Been buying straight at support and selling down at resistance. Books every time, some 80 pips. Is that a rule? 80 pips. Absolutely. Why not? I sold it down at 1925 and booked at 900 Friday. So the only way to test that is to, I mean, you can go back over your charts and just see how often that works out for you. Um, Sounds reasonable. Keep it simple. Trading doesn't have to be complicated. So if that's something that works for you, then brilliant. I mean, that's the idea. Buy low, the low of the day, and sell high at the high of the day or thereabouts. And what I use is that GAN box. I just simply put that on the. Sorry, guys, I have to go. Well, I just have to go back to a black chart, but this is fine. You can see it, but maybe not. Yeah. So, for instance, on this euro, well, let's go somewhere else where it's not so messy. Um, that stuff. So let's say we were coming into the Wall Street Open, and I simply just put that GAN box on what we're working with. So this is the high of the day, and so far this is the low of the day down there. Okay, I'm using some of the London sessions to determine my low of the day. And reason being is because we haven't actually broken any real structure to the downside. So that is basically the swing low in here. Okay, and then we've got the swing high. Is it there, or was it that one there? So my rule is, so long as it's in this bottom third and I'm looking to buy, that's fine. If it's in the second level, then I'm inside of the range and it can go either way on you. Um, Pretty much. I mean, you're if you've got a buy, if you've got a thesis that is going up, then you want to be buying low. So down here is where I'm looking for. So if you're buying at support, so you were talking about buying at support, sure. I mean, this is a support area. Your thesis is bullish, and you just go long. Go long, stop below the lows of the day. Hopefully, that strategy works out for you more often than not, and you get a 2-for-1 or a 3-to-1 even better. And happy days. In this case, it didn't, but maybe it would on the next one. Or maybe the stop was too tight. Maybe I should have had saying my stop's going to be, 2-for-1 instead of 3-for-1, and that would have worked out. Yes, but normally when it rejects, is there something like 50 pips or 80 pips or no rule there when it rejects? Stop hunts, right? Let's look at a stop hunt. So stop hunts are usually between 25 to 50 pips. So let's say you're at the here. So let's go over here. So we broke up high, trading around. This isn't the best example, is it? Okay, so right, well maybe this is the stop hunt. So we're breaking down the market. So we've broken structure. So technically we should be bearish. And around this figure 108, okay, so it's a round number, 108, maybe here somewhere. Right. So around about 108, okay? So the thesis would be, if we're bearish, this market is coming down. Okay, so we think this market is going to come down based on our daily impulse to the downside, the correction, and we're looking for shorts. So when it came up from 107.64, that's a natural profit-taking occurrence, right? So people throwing in the towel here, etc., etc. Why does it keep coming up? Why does it keep coming up? Well, you've got all of these shorts in the market, so the price is coming up to stop them out. In a cynical way of looking at things, or otherwise, what it's doing is it's run out of sellers, right? There's simply no more supply. People don't want to sell at that price, they want to sell higher up. So there are orders waiting to be executed higher up. Okay, so the market gravitates towards those naturally, as it would in any market store. Oranges, people are selling oranges at a certain price. People are buying them at a certain price, and then they fluctuate depending on supply and demand. It's all over the place. So that's the nature of the market. Um, but the stop hunts. So let's say it's come up to 108. We know full well that there are going to be stops above 108. So people have sold this and they're being stubborn, holding on to their price in anticipation. Well, this is just going to keep going, and it doesn't. It corrects and it moves up. So we've come up into 108, and it's done that stop hunt, which is practically, almost 50 pips away from 108. And perhaps here we're doing some more of that into 80-20s, right? Some 20 odd pips away from 108. So you could classify that as a stop hunt. I'm sure I could get a better example from somewhere else, but typically 20 to 50 pips, you can expect there to be stop hunts around the round figures, so to the upside and to the downside. So 108.50, allow for that. Or if on the downside, let's say 107, then you'd be looking at 106.50, 106.75, thereabouts, if it was a stop hunt to the downside before going up. Bloodbush made a trade on euro dollar. You winning? Where did you buy it? Are you saying you just did it now? Or are you talking about what I've got here? This is just an example. Okay, you're welcome. Yeah, so I mean, for instance, just to what can we use as an example? Let's use the Dow, right? That's probably what was the cause of it today. So we're pushing up here. This was the stop hunt to come down. All right, and that's the equivalent of like 25 pips on a currency. Um, yeah. Or, in fact, this, I mean, if we clear this up, you could argue that the intentions are to go higher. Why has it come back down then? And how, that stop hunt, how many pips is that to the downside before it carries on going up? Yeah, market was very choppy today. Not the most friendly environment. Right, being asked for Aussie Swiss. Want it on a white background, I presume. So, Aussie Swiss. From what perspective do you want me to look at this? Are we swing trading it, day trading it? Just want to know if it's going up or down, over what time frame. From a daily chart, we can look at this to start with, while you let me know. So, W formation into the neckline, resistance over here. W formation on this daily chart is here. Okay, and you can see that better on a line chart. There it is, W formation. So when these form, especially at the bottom of a cycle, or potentially what the current bottom, you can regard them as peak formations, and we're looking for a retest of the price coming back in. If you see that on a daily chart, candle chart, you'll see the wicks have actually sort of come in to meet. Okay, so that was the displacement, the pullback. So we're now in anticipation of the price moving up as per the M formation, or double bottom, however you want to call that. So we've come down, potentially we're heading up, but we do have this resistance area that we're moving into, this opposing candle. So that caused the initial drop. Perhaps we'll try again here. Maybe we'll fail and come back inside. Maybe we'll continue up, or maybe we'll just shoot through there. But if I was swing trading it, long term, please, right? So long term as in swing trading, right? Or are we talking about long term as in weekly chart analysis? But for the moment, we are on the front side of the trend. We need to break this area before we can regard this trend breaking down. At the moment, it's still bearish because we can still fall lower until we start breaking structure. So we've got the first peak formation. Are we going to make a second one and then ride higher? Monthly chart, okay? On the monthly chart, right, so bottom of the market, right? All-time lows, thereabouts. Bearish. We haven't broken any structure really to the upside. I mean, we did. Okay, we could suggest this was a structural point. We've come up into that. We've come down over the months, retesting the lows. Still front side of the bearish trend, mind you. It's all very bearish, really. Resistance over here. Just going to measure this correction on the Fibbo. Let's see if it hasn't gone into the 618. So it's tested the 618, starting to come up. Right, so we might be seeing some support in here. I have no idea what went on over here in this wick. Well, I used to do that was the S&B, wasn't it? So I sort of ignore this. This was a very irregular event. This is when the S&B was removed the floor of the Swiss against the dollar, US dollar, plummeted. No, I'd be looking for a deceleration in this sell-off and looking for the correction to the upside. Okay, we're starting to see that on the weekly chart. So we can draw a trend line on that weekly correction. And then we'll be looking for these highs here to break. 57.20. Coming down to the daily chart, what does that look like? Yeah, I'd say that was some structure, pretty much. If you want to be less discretionary, you'd say, well, the swing high, higher up. For me, I think the break of 57.20 would suffice. Again, we've got that W formation. We're looking for the move out of support for a move higher. However, if it breaks there, then a continuation to the downside is more likely. Okay, any other pairs, guys, you want me to look at? So today was pretty much an inside day. Start of the week, monitoring for setups for tomorrow. We'll do that in the morning. I don't trade London, so if you want me to look at anything for London, I can, but I'd rather wait for Asia and London to set us up for the US session. I want the order flow of overnight order flow and levels to build a thesis for my trading day in the US. Euro yen, front side of the bullish trend. We need to see on this daily chart these lows broken, but we're already starting to break these lows. We have broken those lows, so we're in a broken down consolidative environment, but break, pull back, move lower is feasible. Yeah, I'd say it's feasible for a move lower. Right, so we've got breakout, bearish impulse, correctiveness coming into the 61.8, regarded as a resistance level, but give way for a bit higher up perhaps. Looking for that correction to decelerate on the lower time frames. Go to the 4-hour chart, look for structure, break of that structure would be pretty significant, I'd say. So resistance here being seen on this 4-hour chart, these wicks start to decelerate, maybe a move lower, breaking below support, building the thesis for a continuation to the downside. The Bank of Japan, I don't think they're going to intervene. But I mean, if they did, then you'd see strength in the yen. Have you heard any whispers of intervention? I've no idea what level they would intervene. No idea. But last time it was around about 145, wasn't it? Um, Intervention. Let's have a look, see if I can find anything. Yen traders remain on intervention watch, though dollar yen has backed off its recent highs. Yesterday, Prime Minister Kishida met the governor to discuss financial conditions, though reports suggest that the value of the yen was not discussed. Yeah, it's just noise. What they do is they tend to jawbone the currency, and they'll start calling up dealers asking for prices, and then that whisper gets out to the market, and then that essentially does it. But when they physically intervene, you'll see massive movements. But even verbal interventions, can send the yen higher, 100 points or so. But actual intervention, I mean, it'll happen so fast that I mean, you'll be out at a flash. You can see 300, 400 pip moves. Um, yeah, but like you said, trailing your stop is a good way of dealing with that. I mean, there's no hype. There's nothing really on. No word on the street of intervention. But if that starts ramping up, that's when I start being cautious. But at the moment, I haven't really heard anything on the wires. Okay, so I think I'm going to wrap it up here, guys. You're welcome. Okay, majority short euro yen. Okay, Zeb, that's fantastic. Okay, great stuff. Well, at some point, once I've got the PDFs sorted, we can sort out the we can start. I can start drip feeding it through piece by piece, right? So, but it will be released as an entire course at some point later in the year, a couple of months time. But as I get the PDFs done, we can start introducing this to the analysis. What I was thinking was to do day trading setups and analysis in the morning, and then swing trading at the end of each close, so that we know where we are. Because on the swing trading, it will be monitored on a daily close basis and 4 hour candles, and executing on a 15-minute time frame. Anyway, right, excellent stuff, guys. Time for my siesta, and I'll get back to you guys in the morning. So have a great afternoon, evening, day. See you tomorrow.